Alright, so Palantir's Q1 earnings report came out this morning, and I don't know what to say other than oof. If we look at the price chart here, you can see that it's down 22% on the day, and if we zoom out to the 5-day chart, it's down over 30%. And while part of this is definitely related to macroeconomic factors that are just outside of the control of the company, the recent earnings report has had a slew of negative news articles come out that have been driving down the price. And there's a few factors that I want to talk about. Some of the bad aspects of today's earnings report, but also some of the good aspects, because it's definitely not all bad. And I think that some of what we're seeing in the headlines is a little bit overblown. If you're reading anything about Palantir's earnings, you're probably going to see articles like this talking about how there was an earnings miss. Earnings per share was less than what the analysts expected. So what does that actually mean? So the company posted adjusted earnings per share of 2 cents as opposed to the 4 cents that analysts were projecting. And so now that's 2 quarters in a row where the EPS was actually less than what the analysts were projecting. And of course, that's not going to be good for the stock price, and it's not going to be good for the headlines that we're seeing in the news. The thing is though, that seeing headlines talking about how Palantir has missed on its earnings is actually a little bit misleading, because these figures aren't actually related to the operations of the business. These are the result, more or less, of some SPAC investments, some investments that Palantir made in early stage growth companies that have not panned out. And so since they're holding these investments on their books, that accounting for that is actually affecting the earnings per share, even though operationally the business is actually improving in terms of its profitability. But I'm going to touch more on that later when I talk about the more positive aspects of this earnings report. Something that I do think is important to mention here, though, is that while Palantir has definitely had a bad day and certainly a bad couple of months, they are not alone. And if you look across the tech sector, especially in companies that are growth companies, high multiple growth companies, we are seeing similar or potentially even worse results. For example, Shopify down over 76% in the past 6 months, Coinbase down almost 76%, Fastly down 76%, and Roku down almost 70%. So basically every company that Cathie Wood and ARK Invest has put into their portfolio is down around 70% over the past 6 months. Some of them down over 80% from recent all-time highs. So definitely not just Palantir. Nevertheless, I don't think we can attribute this full 22-point drop today to the larger macroeconomic trends, because there's definitely a few things from this earnings report that aren't so solid. For starters, Palantir's quarter-over-quarter revenue growth, not year-over-year, which is what we usually see presented, but quarter-over-quarter from Q4 last year to Q1 this year, is actually only 3%. They had $433 million in revenue last quarter, and this quarter they had $446 million in revenue. So that works out to about a 3% Q over Q growth rate, which is definitely not stellar. And with a high multiple growth company like this, definitely not something that you want to see. We want to see much greater growth. Now, of course, Palantir's multiples, like price to sales, price to earnings, are steadily decreasing as the stock price drops. They're still valued as a growth company, as a tech company. Although with the current multiples that we're seeing, I would say that Palantir is either quickly approaching or is already in deep value territory. Anyways, another negative point from the earnings report that I want to talk about is the guidance for the next quarter and for the rest of the year. Because Palantir is guiding for $470 million in revenue next quarter in their base case, although they're saying there's some events that could potentially push that higher. And analysts actually were expecting higher than that. They were expecting a projection of $484 million for next quarter. So what this means is that, again, there's a little bit of a disconnect between what the analysts are expecting and what Palantir is producing and the internal projections that Palantir is coming out with. Although I should say that they have actually done a pretty good job with their guidance. Although a lot of people, myself included, have been hoping that Palantir is sort of sandbagging their growth projections so that they can outperform people's expectations, that doesn't actually appear to be the case, and they seem to be actually quite accurate with their guidance. So in this case, we are seeing a little bit of a disconnect, and that is obviously not good, because really what matters in the market when it comes to the stock price is not so much fundamentals of the business, but investor sentiment. And right now, of course, things are not going well in that department. Now, with all of that said, I do want to focus a little bit on some of the good aspects of this earnings report, because it's actually not even all that bad. And despite the fact that some of the headlines headlines are saying it's an earnings miss because of that earnings per share figure, like I already mentioned, that's largely due to some accounting that happens after the fact related to their investments in SPACs and not actually related to the operations of the business. And as I'll show you right now, those are actually doing much better than they were last quarter, and we're continuing to see steady improvement. So for starters, their revenue grew 31% year over year. Now, this is not revolutionary, and they have been actually guiding for 30% year over year revenue growth until 2025. So from 2020 to 2025, that's been their goal, and they've been hitting that or exceeding that in every single quarter. So on that front, they're doing quite well. And commercial revenue is doing even better because that's up 54% year over year. And in the US, the commercial business is up 136% year over year, which is obviously exceptional. And that is the Palantir Foundry platform that's generating these results. Customer count also increased 86% year over year, which you love to see, and profitability is continuing to trend upwards at a pretty steady clip. Now, they're still at a 9% GAAP operating margin loss, and some of that is actually because of stock-based compensation. So again, it's not impacting the free cash flow of the business, but it's a result of some accounting for other aspects that come in after the fact. And their actual adjusted operating margin without all of that stuff is 26%, so pretty solid. And this figure here is another one that you love to see, and that's the net dollar retention of 124%. And so what that means is that Palantir is making 24% more from their existing customers versus the prior period, as opposed to if there was a 100% dollar retention, what that just means is that they're making the exact same amount from their clients as they were in the last period. So in this case, what they're doing is they're actually making more from their existing clients. And if they can continue to do that while also ramping up the sales pipeline and bringing in new clients, then we'll see that snowballing effect of the revenue. So seeing this figure above 100% is a very positive signal. The number of deals closed is way up, the billings are way up, and the total remaining deal value at $3.5 billion is also up from the same period last year. And that's another solid positive indicator. And what that means is revenue that's been booked on paper, but it hasn't been recorded yet because it's going to come in future quarters. And so that is just basically a pipeline of practically guaranteed revenue that we know we're going to get over the next few quarters, the next few years. And one last point that I want to make about the financials of this company is about their cash versus debt situation. And this, in my mind, is one of the most positive indicators about the health of this company and the fact that they're definitely going to be able to withstand whatever macroeconomic pressures come at them, because they have, as of the end of the first quarter this year, $2.3 billion in cash and absolutely zero debt. And on top of that, they have a $500 million credit line that they can draw down if they need to, but they haven't drawn down any of it at all. So what this means is that Palantir has a massive cushion to fall back on if for some reason things go terribly bad and there's a massive global recession or even a depression. This type of situation is unheard of. Palantir has literally zero long-term debt. If you look at any company in comparable sectors or in any sector across the board, you are not going to find a company of this size, of this magnitude, that has zero long-term debt. And so yes, I do see the comments of people on my Palantir videos here on YouTube suggesting that the company is going to zero. And aside from all of the other metrics, this alone is the clearest proof that you could possibly have that that's just never going to happen. Okay, so what about moving forward? Well, Palantir is continuing to project that 30% year over year revenue growth rate from now until 2025. So they have remained consistent on that. But despite that consistency and despite all of the positive aspects of this earnings report, the stock just keeps getting pummeled. And another thing that's a little bit puzzling to me is that these current macro environments, while technically negative for most people, should actually be a little bit of a tailwind for Palantir because they thrive in these types of environments, and their software products are actually built to help companies or governments actually make it through inflation and supply chain issues and labor shortages and global insecurity and war better than they could if they didn't have Palantir's products. And as much as I hate to say it, and I haven't talked about this on the channel yet because I do feel a little weird talking about it, but the fact that there's a war ongoing in Ukraine is going to make Palantir's products even more important. The thing is though, government procurement is very slow. And I actually worked at the Defense Department in Canada for several years, and I've seen this from the inside. These types of things, multi-million-dollar deals, don't get signed overnight. So despite the fact that there's a huge amount of rising uncertainty and fear as a result of what's happening in Ukraine, we're not going to see a direct translation to new contracts for a company like Palantir overnight. It's going to take some time. That said, mindsets are definitely shifting, and in Canada as well as other Western countries, we're probably going to see a significant increase in defense spending in the near-term future. In fact, just a couple weeks ago, the chief of the defense staff in Canada, who's the top dog in the military here, is just calling for accelerated defense investments as a result of Russian aggression. And you know, this isn't just happening in Canada, but also, of course, the US, the UK, and all of the other Western allies that are seeing what's happening with Russia and Ukraine and are realizing that they need to beef up their security situations. Now, a little known fact is that I actually wrote my master's thesis on arms races. I've studied the game theory, and I've studied the implications of arms races for new technologies like artificial intelligence. The TLDR is that when states or countries acquire new weapon systems to increase their own security, other international actors are going to perceive an increased threat level. And from there, the logic of an arms race is apparent because their adversaries are going to feel the need to acquire new weapon systems to respond to that increased threat level, and that sets off the cycle of arms races. Failing to respond to what another country is doing is going to potentially pose an existential threat to a country, which is obviously unacceptable when your only guarantee of security is strength, or the number of weapons that you have and the quality of the weapons and weapons support systems that you have. And so everything that we're seeing now is going to increase the level of threat perception in the international environment, which is probably going to directly correlate to an increase in defense spending. And while I hate to say it, times like these are exactly when we need Palantir the most.